Welcome back to Rapid Quants. It's Monday, October 7th, 2024, and we're back with another market update. Okay, let's see where we are. Crypto market first. Well, we're not going anywhere fast. And we keep bouncing around in the sideways flag that we've been painting now for well over 6 months now, since late February actually. And wow, now it's October. So, is this thing going to resolve anytime soon? Well, I think I'm as frustrated as anyone else at this point. But it's always good to engage in a little bit of self-analysis, because if I'm frustrated and you're frustrated, odds are everyone else is frustrated. And that usually is the moment when big things happen, when big moves happen in the market. And there are a few things that I want you to pay attention to. I often talk about expected move, the expected move range in terms of the price range, the expected price range for a particular instrument each week. Where do I get them from? Well, I calculate them based on an algorithm that I put together. It's not overly complicated. All it does is really look at price activity over the last month, and it calculates one standard deviation of what the range was for the last month. And it uses that to assess the anticipated trading range for the next week. We do this every Sunday, actually. On the stock market, we do it every Friday when the market closes. And in that case, it's actually based on implied volatility, because there we have implied volatility, which again is a product of trading activity. It's based on pricing risk, handicapping risk. Because when options become cheaper or more expensive, it's based on the perception of risk. That's why it's called implied volatility. Now, I wish I had access to that here in the crypto market, but unfortunately I don't. There are some sources for that now that are developing, but they're not really up to snuff just yet. So in the meantime, I'm using an internal algorithm I put together, which just uses historical volatility or realized volatility. And based on that, these ranges actually have been holding up fairly well. I've been looking at them for several months now, and they've been holding up extremely well, actually, I think. And if you look at the range for this week right here, does anything stand out to you? Well, let me actually show you the one on Ethereum. And maybe then it makes more sense to you. See that? That's this week's range, and this is last week's range. Okay, so what's quite obvious to me is that the ranges are compressing on both Ethereum and Bitcoin, especially on Ethereum, by the way, because we've seen more volatility and that's actually dying down now. So what happens when these ranges compress, when the expected move range compresses on a particular instrument? The inflection points are getting closer to each other and also closer to the opening price for the week. So what happens is that if we actually go and touch this or exceed it, the odds for acceleration are pretty high. And we have the same thing happening on Bitcoin. See that right here? So right here, on Bitcoin, of course, it's been a little bit more bullish, right? Here we have a nice sideways flag. And on the upside, we have also last week's expected upper threshold. The upper threshold of the expected move range last week lined up fairly nicely with this line that I've drawn, which seems to frame it very nicely, this sideways flag that we've produced. And well, we didn't get there, right? We seem to be dropping a little bit earlier now, which is also interesting. But that's not necessarily a bad thing. It's not necessarily a bearish thing, because the whole formation seems to be holding up fairly nicely, right? We're seeing price spend a little bit more time now in the upper range, which is good. Now, in regards to this week's range, we're here right now, still fairly close to where we started the week. And if we breach above this, which actually nicely lines up with last week's peak right here, see that? By the way, forgive my voice. I've caught a little bit of a cold for my wife, but I think I'm actually beating it. I've only had it 2 days, but I'm feeling a lot better already. So in general, it's looking pretty good. We're spending more time in the upper half of this channel, but we still need to breach these inflection points. And the first one is around 66K, and the next one is near 70K. Until we breach those, we're just going to remain stuck in this channel, and I hope it's not going to be ad infinitum. And fingers crossed that towards the end of this year, we're finally going to reach escape velocity and take off higher. That's the idea here, right? But price has to follow suit, so hard to predict when. But the fact that these ranges are compressing is pretty positive, and that's exactly what we want to see. If we're looking at the altcoin market real quick, and I've drawn some channel lines here as well. It's drawn a similar channel as Bitcoin, but it's more droopy towards the downside. And what stood out to me is that, again, we should be drawing this with a crayon, but just kind of, that's what we have to work with. I like crayons because I like thick lines. Why? Because it's never a specific inflection point. It's not a specific price point where support or resistance kicks in. It's always a range. Just keep that in mind. But having said that, it's retesting here this upper resistance line, what used to be upper resistance line. And this looks pretty positive. Let's see what happens here. It's a little glimmer of hope on the horizon for the altcoin market because, we trade altcoins in various ways with sentiment alerts, of course, and partnership alerts, etc., etc. But it's not been a really helpful market phase over the last 6 months. And hopefully we're going back to something that we had in late 2023 and early 2024. That was great. Hopefully we're going back to something like that in the next quarter and next year, of course. So keeping an eye on that. But this is a good graph to follow. Always look at total 3 and you get a pretty good idea of what the altcoin market is doing overall. Okay? All right, let's switch gears real quick. Let's talk the systems. Gravitas. Here's the actual price chart, and it also gives us the signals. And you can tell what it's been doing in the context of the gray line being Bitcoin, USDT, and then the action's been taking short, long, short, long. Obviously, this price action here, this entire cluster over the last 6 months, I would describe it as Dr. Seuss' worst nightmare. And it's just been terrible. And it's done extremely well. I mean, look at this, right? It just got faked out once or twice here a little bit, but then it got snagged. Basically, it got faked out right here where it ended up taking a long position and then the market fell back almost immediately. Unfortunate, but this happens very rarely. If you're looking at the long-term signal, it's been just phenomenal. Just really picking those swings so nicely, and I love it. I'm very happy with the system, and again, to kind of explain to you what it does, here's the profit graph, by the way, for the last 4 years. It's close to 100K still. And again, it's holding up very nicely in this market range here. I love this system. And if you wonder what the difference is between, for example, Gravitas and Veritas, right? Gravitas trades Bitcoin long and short, and also Ethereum, long and short. We have 2 signals, both Bitcoin and Ethereum. Whereas Veritas is more of a seasonal signal. So it tells you whether or not you should be in Bitcoin, long, Ethereum, long, altcoins, long, or if you should be in cash. Well, I'm always long cash, but you get the idea, okay? So we have cash, Bitcoin, altcoins, and Ethereum. It's a seasonal trend system, and I think it's extremely valuable. Again, it's done extremely well over the last 4 years, as you can tell. It really done phenomenally during the bear market, I think. It kept most of its profits, got hit a little bit, but that's to be expected. And it really took advantage of this one here, the late 2023 run. It's beautiful. So loving it. All right, let's switch gears real quick to stocks. So what you're looking at right now is actually a stock system. It actually trades the spiders, and I call it Vixen. And the way this works, and I'm going to actually run it real quick so you see last year's returns, okay? So I'm going to run it based on that. Oh, I think I ran it actually. Let me reload, okay? Yeah, there you go. Already did it. So what you just looked at is the last 4 years, and I'm going to bring that back. But if you're looking at this profit graph right here, over the last year, that's just basically on the basis of trading the spiders either long or short. This is the short returns, the long returns. Obviously this year, the long returns have been doing better. I would still trade both sides if you can. If you can just trade long, of course, not a problem. And it is the combined profits right here. The way this system works, it's based on the VIX and the 3-month VIX. The 3-month VIX is called VIX3M, but we used to call it actually VXV. I still call it the VXV because I'm a dinosaur. And just VIX3M is just a pain in the butt to say, right? But if you look into VXV, the 3-month VIX versus the VIX, there are certain patterns that I pointed out over the last few years that I've picked out and that I've been trading upon, right? I've been trading on the basis of these signals that I see in the market. And based on that, I've been trading the spiders. And it's really worked so well the last few years that I finally decided to put it into a trading system. And I call it Vixen for obvious reasons, right? And that's basically what came out when I started the backtesting. And it takes the same entries that I would be taking manually until recently. I've been taking the entries manually. Now I'm doing it in a more automated fashion because it's all in code now, right? I was really stunned when I saw the returns because I didn't expect it to be this good. And it's just great. I love the system, again, called Vixen. And the signal is actually up and running already. I'm alpha testing this internally. So soon you guys are going to have access to that. You're going to be able to subscribe to it. Price point, I don't know yet, but it'll be affordable. So you can just roll with the punches here, basically. It trades the long side and short side, and each time it only holds the position for 2 days, which I think is actually very cool. So there's no thinking involved. You just basically take the position on. It's either short or long. If you just want to trade the long side, fine. Just follow the long signals, and then you just hold it for 2 days. That's it. It's super simple. I mean, it couldn't be any simpler than that, actually. So I really love the system. It's great, and it's going to be available under Vixen. Okay, I think that's all my sinuses can take for this week. I apologize. I'm still kicking this cold, but I'm pretty sure I'm going to be better next week. So, in the meantime, pay attention to the charts, the inflection points we talked about on Bitcoin, Ethereum, etc. on Total 3. If you're trading Gravitas, follow the system. It's a good system, okay? Don't pay attention to Twitter. Don't pay attention to Reddit or any other social media that you might be following. Any hot tips you're getting, stick with the system. It's more reliable. And yeah, that's pretty much all I got for this week. See you all next week. Cheers.